Hey everyone, it's Pam. I hope everybody is having a super awesome day. I'm sitting here on my steps, just chilling. But basically, I wanted to do a video on how to pay off your mortgage quickly. Most people, when they get a mortgage, it's usually either 15 years or 30 years. And sometimes they have 20-year mortgages too. I've even seen 40-year mortgages, but none of my clients have, did it so far. So what happens is that a person obtains a mortgage. It could be a VA loan, it can be a conventional loan, and they pay for the lifetime of that particular loan. So the thing is about amortization is that you pay all the interest up front. So, for example, let's say that you um, bought a house. The house was $300,000, and it being $300,000, you're probably paying maybe about 1,800 a month. Don't quote me on that because the interest rates fluctuate every day. So, how did amortization come to exist here in America? Well, during the early 1900s, they had the Great, Depression, and a lot of people were losing their properties. So they had these people would have what they would call interest-only loans, and at the end of the term, the person would have to, pay the lump sum of money back. So if they borrowed $20,000 and they had that loan for 5 years, at the end of the fifth year, they would owe that money and they would have to pay. So what happened was people were losing their farms, their homes, and so the government came up with a way for people to save their houses, and that was amortization. So that's the history of that, and that's kind of where FHA and the different government agencies kind of came into effect. But we're not going to go into that. Okay, so let's talk about that. I'm going to share my screen out, and I'm going to show you guys. And I'm making this video quick because I got to run. I got 100 things to do. So let me see how we're going to share this video. I don't know if I can share the video. Uh-oh. I might made a boo-boo. Yes, I did. I did make a boo-boo. Okay, so I'm have to give you an example. So I'm trying to make it the illustration pretty good, and I wish I had a printout of it. Okay, I want you to go to amortization schedule. Go ahead and Google it. Okay, so put in the amount $300,000. If you put in that amount of $300,000, you will see an amortization schedule, and I'm going to go to that page now because I had actually pulled it up for everybody. But I clicked the wrong buttons, but we're going to proceed on. So if you notice the total payment is 1,000. Let me see the interest rate. I put $300,000 in a 30-year term at 5.25. And as you see, the interest is $1,313. That's the principal and interest. And if you look at the right side, you have a balance of 299,656. Okay, and you have principal of 344. So what does all that mean? Basically, that payment of $1,313, if you minus the 344, all that money, less $1,000 is going towards interest. So this is what you do, and I'm going to tell you quickly how to do this. If you have a mortgage, okay, let's say that the mortgage is $1,500 a month. Do a second payment, and that second payment will go only to the principal. But you have to specify that to the mortgage company, because what they'll do is they'll make that payment go towards the next payment for the month, if you understand what I'm saying. So let's say if you have a payment of $1,500 a month and you want to pay an extra $100 a month, it's going to reduce your principal amount by $100 plus the principal reduction. So in this example of $1,313, the balance went down to $299,656. If you made an extra payment of $100, then your payment would go down to your balance would go down to $299,556. Okay, If you keep doing that consistently, you can really shade off your mortgage within a good 10 years. But you have to be disciplined. That's the thing. You have to take that money and make sure that you're applying it towards your principal amount. And you have to specify to your mortgage company that this extra $50 or extra $25 or extra $200, extra $500 is going towards your principal. Because once that principal is paid off, your mortgage is paid off. And isn't it exciting to live in a house that is mortgage free? Let me tell you something. It is super wonderful. So, if you have any questions, you can always hit me up. I'm gonna start doing another. I'm probably gonna do another video on how to use a line of credit to pay your mortgage off quicker. But I just wanted to give you this quick video, and I look forward to speaking to you guys soon. Bye bye.